Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review or end of day market analysis on the European markets, being brought to you courtesy of CFDs.com. Be sure to visit www.cfds.com to learn about the specialist spreading at CFD brokerage and the services on offer. Alternatively, visit the educational site www.cfds.education for updated charts, etc. Okay, the markets themselves, they closed down negative today in the European markets overall. Well, more or less overall. Basically, you had the FTSE down by 20 points in the end, even though Vodafone earnings were stronger. We had Premier Foods, we had Prudential, certainly stronger, but the market certainly chose to focus on the concerns of via China. Okay, we had CAC more or less flat on the day. The German DAX managed to close up 17 points, which was pretty impressive. But we shall see exactly what it is to come in terms of price action itself. Okay, now let's try and dissect exactly what happened today. We had the Asian markets obviously under pressure overnight, mainly the Hang Seng. The Shanghai was flat, although the Nikkei was certainly positive for the session. Okay, now we've had the US markets fall quite substantially. The Dow Jones is down 30 points, the S&P down 2 points, and we have the Nasdaq itself certainly under immense pressure as well, mainly due to the concerns with regards to Apple and the stock of Apple falling as well. Okay, now in terms of the data itself, we did have economic data on the docket in terms from the actual CPI effect. We had a weaker inflation number. Industrial output in Italy certainly missed target. Other than that, the main real economic data really that everybody focused on was the actual inflation number as well from China, and that was certainly the main concern out of all the variables together. Okay, so where do we stand and where are we actually headed? Now, the main variable that was of importance in the European markets and which led to the actual rally towards a close as well was the Euro USD. Now, if I just bring up the chart of the Euro USD on a 60-minute chart, you can see that we actually put in a pivot low on the Euro at 1.0675. So certainly a bearish, obviously, move on the Euro USD itself. And given the fact that the dollar certainly strengthened as well, and the dollar itself is finding some resilience or finding resistance at present. As you can see here, potential double top on the dollar index at present, and you do have an unfilled gap below that needs to close on the dollar index. So we have an unfilled gap further down as well if you were to look, and you can certainly see that we have an unfilled gap below. So certainly a potential double top scenario on the dollar index itself. And that really has been the main vehicle as to the actual market strength. As you can see here, the stock markets certainly have been moving higher on the dollar itself, so just bear that in mind. Okay, so a weaker dollar may well lead to weaker equity prices in terms of the US markets, but will certainly help commodities. So it will certainly help the likes of the FTSE 100 on the upside. Okay, so if we can see the actual the dollar itself here now putting in a potential top, then that will certainly help commodities. Okay, now the Shanghai index obviously failed at the 75%, or stalling at 75% fib. The Nikkei certainly has another gap to close, so all eyes on the Nikkei here. So as to the market close, you can see here green candle, and we are attempting to push higher in terms of closing the gap above. Okay, now let's break down each sector in terms of the German DAX. First of all, you can see on the daily chart, the German DAX, we did put in a potential bottoming tail here. Okay, so that certainly needs to be focused on. As you can see, the euro dropping below 1.07. It's currently above 1.07 at present, but that certainly remains the overriding and overwhelming factor. Now, there is obviously a article out which was yesterday. Reuters reported exclusively on Monday that a consensus was forming at the bank to cut the deposit rate further to weaken the euro and push inflation higher. Even Germany, which initially opposed QE, has so far voiced any resistance, has not voiced any resistance. So we did have Mr. Wiedmann today, though, and we did have the ECB faces 3 lawsuits in terms of QE or potential or further QE. Certainly an argument against further QE. So that certainly was a hawkish stance or hawkish comments on the actual euro itself, but even then we still managed to make new lows. So that was quite impressive. Okay, and that certainly reversed the losses on the European indices. Now, obviously, we had the concerns over Porsche and Volkswagen again dominating. Now, if you look at the actual automobile sector, if I just bring up the DAX auto sector here, bear with me. Here we go, automobiles. So you can see here, initially we had the sell-off on the German DAX down to the support level. We've obviously already closed the gap. You can see that the automobile sector certainly found support. The bearish news from Porsche, obviously profits halving, etc., etc., certainly factored in. And then obviously we had a bounce, as you can see here, 200 MA gap fill, boom, off we went to the races. So, and that obviously helped the German DAX as well. Also in terms of the banks as well, the banking sector, given the fact that the banks certainly have been under pressure ever since yesterday's comments with regards to a potential rate cut. Obviously that hurts the banking sector, and that certainly has been a negative drag on the market itself. But the automobile, as you can see, certainly up. Also the retail sector as well. You can see here we approached 200 MA in gap fill, and off we went to the races again. So quite an impressive thrust higher on the retail sector in Germany. And the automobile retail, they mainly are the main sectors at play in terms of strength and weakness. Now, going to the DAX mid 50, as you can see here, another potential bottoming tail on the DAX mid 50. Again, all eyes on DAX mid 50, but certainly has bounced off support. Teco share, again, potential doji, and it will be interesting to see where the Nasdaq closes today. Okay, now the German DAX, let's just revisit that again. There is a slight concern with regards to the German DAX. If I look at the 60-minute chart, that's my only concern. You can see here we may well be putting in a potential HNS formation to close the gap below at 10,500. Now, given the fact that we have the Draghi put, the QE put in place, again, it seems to be very hard to actually envisage that and see that materializing. So again, that certainly needs to be something that we certainly need to focus on. Okay, in terms of the markets themselves. Okay, now the 10-minute chart has an inverted head and shoulders formation in the German DAX, so all eyes on the German DAX itself, and then we are looking at a potential thruster and move higher in the German DAX itself. Okay, so certainly keep an eye on the actual IHS formation. Now the French CAC, let's have a look exactly where this French CAC is currently trading. Daily chart itself, we did obviously hold a 200 MA, a potential bottoming tail there, so certainly a positive sign. Also bear in mind that the daily chart on the French CAC certainly has an unfilled gap above at 5100. That certainly needs to close, and obviously we have this overwhelming IHS formation based on this expectation of December Christmas rally potential, obviously QE, etc., etc. So that trade certainly is in full steam. Now the 10-minute chart itself on the French CAC, again, one would interpret that as an inverted head and shoulders. Again, you could certainly argue that was the case, but the main focus from my perspective is the fact that we have not made a lower low. Okay, and you can obviously, technical analysis is very subjective, and you can certainly draw anything you want and justify anything you want from a TA perspective. Ask Ellioticians that, they'll certainly tell you. But overall, you can see the main concept is the market has not, or European equities have not made a lower low. Okay, we've made a potential double bottom here, and we put in a higher low and a higher high, and that's certainly innocent until proven guilty, and therefore we are looking to potentially move higher up to the 200 MA, and you're targeting around the 4950 area on the European equities. So that certainly remains the main focus there. Okay, now the actual CAC 40 itself, you can look at the volatility index as well. You are coming into potential resistance on this CAC 40 volatility index. As you can see here, we've put in a potential top now, and the actual rally in the volatility index, as you can see, certainly has come to an end, and we are looking at potential movements lower and a movement lower, and therefore that will help the French CAC to certainly move higher. So bear that in mind. Okay, the V stocks as well, you can see a doji was put in today, looking at 60-minute chart, certainly looking at exhaustion. Looking at a 10-minute chart, you can see that a double top was put in the volatility index on the Euro stocks, so again, therefore sending Euro stocks higher. Okay, now the actual Euro stocks index, I can bring that up as well. You can see 10-minute chart certainly has an inverted head and shoulders formation, targeting 3460, 3470, 3480 on the upside. The 60-minute chart itself is vulnerable, given the fact that we are retesting that breakout level on the key diagonal trend line, and given the fact that you are looking at a fib retracement from high to low at around 38% at present, but you still have room for 50 to 61% to be hit, and you have potential movement higher, so certainly a higher probability there. Okay, now in terms of the actual FTSE itself, FTSE 100, you can clearly see that we've hit the HNS target on the FTSE on the 60-minute chart. Very hard to envisage that today. I certainly was caught off guard, and I was stopped out on my FTSE long position from 6281 because I expected the Vodafone earnings to certainly help the FTSE propel higher. Obviously, given the fact that we had Premier Foods stronger, Prudential stronger, Aviva stronger, and obviously Vodafone is a bellwether, and that still failed to prevent the actual sell-off on the FTSE. Now, that was mainly due to the fact that zinc is one of the main obviously commodities watched in terms of the Glencore, okay, and that certainly was under pressure. Now I'll try and make a separate video for the FTSE itself and explain and elaborate on the potential moves on the FTSE itself, okay. Now, the S&P 500 is going to be crucial here now in terms of the next movement on the index itself. You can see that the right shoulder is certainly held on the S&P 500, but given the fact that the Nikkei was higher overnight, it's certainly very hard to envisage a sell-off occurring on the S&P. We failed to make a new low as of yet, and we have held that double bottom, so therefore you are looking at a potential short squeeze back up to the 2083, 2085 level, and you are still in this rising, or should we say expanding, falling, contracting wedge pattern. So certainly a probability of 2085 again, potentially even 200 MA, and bear in mind that you do have the unfilled gap at 2098 that needs to close as well. So certainly an interesting scenario as to the next movement here in the S&P 500. Okay, so again, it's all about the S&P. If the S&P can hold these lows and start to move higher, very bullish, and that will send European equities higher. If that's not the case, then obviously you are looking at a potential reversal, okay, in the actual market itself. The euro certainly is pushing higher, so that's not going to help risk sentiment, okay, going forward, but you are retesting the breakout level, so expecting a potential another flush lower on the euro USD itself. Copper itself is, if you look at the chart of copper, certainly is starting to bounce. The daily chart, you can see we are into support, so therefore that will help equities globally. The chart of gold certainly has started to bounce as well, so that should certainly help the inflation trade, i.e. equities. And oil certainly has put in a double bottom and is now putting in a potential higher low, again bullish for equities going forward. So for my analysis on European stocks at present, again you've put in a doji here. The next level on the Euro S&P 350, Europe 350 is looking at the 200 MA. Overall, it slanted towards the bullish side given the fact that you have weakness in the euro, and you are seeing a potential QE put or QE trade certainly in full motion. Now it's all about the S&P 500. If the S&P 500 can hold that low there on the 10-minute chart, it certainly has look as if it's putting a double bottom and building a base. If you use your TA skills here, just try and connect the lows and highs, you can see that we are making some type of symmetrical wedge pattern. So either we break out higher or we break out lower. My trading, based on my understanding and of the markets thus far and the way in which everything is occurring, I'm expecting a potential breakout higher to 2085, 2086, and thereby taking the European indices with it. Okay, so and again, it's all about the euro QE put, etc. That certainly seems to be dominating, and it's very hard to envisage any sell-off, especially after today's price action. The market certainly has reversed. I mean, you can look at the euro USD, or sorry, euro stocks itself at present, and if you look at a 10-minute chart, you're looking at a potential inverted head and shoulders formation. If you look at the French CAC as well, you are looking at a potential inverted head and shoulders formation. If you look at the German DAX, again, inverted head and shoulders. So it's very hard for me to envisage a sell-off in equities at present. If anything, you are looking at a potential dollar strength, which obviously will continue to help the fundamental trade, and that will help equities itself as well. I have got the Nasdaq here at present. I did have an inverted head and shoulders. That inverted head and shoulders is not playing out as expected thus far. So certainly potential weakness here. We are above the 75%, so I'll give it the benefit of the doubt for now. But all eyes on the unfilled gap above. Whether given the fact that Nikkei was obviously bullish overnight, I am looking for that gap to close at 46.55. Now it has to be quite a stellar rally from here, and we shall see exactly if that occurs. The market will dictate as to the next direction on this market, or next move in terms of European markets. So US markets dictate. My bias certainly is on the upside. Very hard to envisage a potential sell-off, given the fact that there's no overriding or overwhelming risk-off scenario at present, other than the fact that China, obviously inflation data, but a lot of that has been factored into the market. So we shall see. Okay, again, markets will choose the next move. Okay, folks, stay safe. Be sure to visit cfds.com for your trading needs. Goodbye.